In today's video, we'll delve into Nvidia stock options analysis to provide you with a comprehensive understanding of what could be in store for this tech giant. But before we dive into the details, here's a quick question for you. Have you ever wondered how some investors always seem to be one step ahead, knowing just when to buy or sell? Today, we're going to reveal the key insights that could make all the difference in your next trade. So, if you find value in this video, please support the channel by liking and subscribing to our weekly updates. Now, let's get started. Nvidia, a powerhouse in the semiconductor industry, has consistently been at the forefront of technological innovation. From powering high-end gaming experiences to enabling artificial intelligence applications, Nvidia's influence on the tech sector is undeniable. The company has grown exponentially over the past decade, becoming a staple in both gaming and professional markets. Their GPUs are not only a favorite among gamers, but have also become crucial in data centers and AI research, underscoring their importance in multiple industries. However, today's focus is on Nvidia from an options trading perspective. We'll explore the current trends in options trading around Nvidia, particularly focusing on the $100 put options, key support and resistance levels, and what all of this could mean for investors this week. So why is Nvidia's stock such a hot topic right now? Nvidia has been one of the top performers in the tech sector, with its stock price reflecting the company's strong financial performance and innovative product lineup. But the market sentiment can be volatile, especially with tech stocks. This volatility is what creates opportunities for options traders to capitalize on price movements, whether the stock goes up or down. It's important to note that Nvidia's stock has seen significant growth over the past few years, making it a favorite among both long-term investors and short-term traders. Let's talk about the $100 put options that have been garnering significant attention in the market. The data shows a notable amount of interest around this price point, indicating that many traders are hedging their bets on Nvidia potentially dipping below this level. But why is this $100 mark so crucial? What makes this level stand out among other price points? The $100 mark represents a psychological barrier for many traders. Breaking below this level could signal a shift in sentiment, leading to increased selling pressure. The $100 level is crucial, serving as a psychological barrier. If Nvidia's stock drops below $100, it could trigger a wave of selling, leading to further declines. Traders might see this as a signal to buy puts or short the stock. As of August 16, 2024, Nvidia's stock is currently testing key support levels. The $97 support level is particularly important. Nvidia has bounced off this level multiple times in recent sessions, making it a critical area to watch. If Nvidia fails to hold above $97, we could see the stock drop closer to $90, making those $100 puts even more attractive. On the upside, Nvidia is facing resistance at around $106, a level that has proved difficult to surpass. A break above $106, especially if Nvidia can stay above its 20-day moving average, currently at $102, might push the stock higher, potentially into the $110 to $111 range. One critical indicator to watch is the 20-day moving average, which is essential for tracking Nvidia's short-term trend. Currently, Nvidia is slightly above its 20-day moving average. If the stock price remains above this level, it may attract more buyers, pushing the stock higher. Conversely, falling below it could indicate bearish sentiment, signaling a potential sell or put opportunity. Additionally, Bollinger Bands, which consist of a middle band, typically the 20-day moving average, and two outer bands representing standard deviations from the middle band, are another tool to consider. Nvidia is nearing the upper Bollinger Band at $122.88, indicating that the stock might be overbought. This could be a signal for traders to consider taking profits or buying puts. If Nvidia pulls back to the lower Bollinger Band around $95.44, this might represent a buying opportunity or a chance to consider calls. But before we proceed, here's a question for you. If Nvidia hits $100, what do you think will be the ripple effect across the tech sector? Comment your thoughts below. However, if Nvidia fails to break above the $106 level, which is another critical resistance point, the likelihood of the stock falling back to $100 or even lower increases. This is where the $100 put options come into play. Should Nvidia close below $106 and remain below $102, the probability of those $100 puts coming into the money becomes much higher. In options trading, the closer the stock price gets to the strike price, the more valuable those options become. This is especially true for short-term options. where time decay can rapidly erode the value of an option that isn't moving towards its strike price. Let's not forget about implied volatility, which plays a significant role in the pricing of these options. Higher implied volatility, IV, indicates that Nvidia's stock could experience more significant price swings, making options more expensive. When IV is high, some traders might consider selling options to capitalize on the inflated premiums, especially if they believe volatility will decrease. Alternatively, strategies like straddles or strangles could be used to profit from potential large moves in either direction. Now let's shift focus to the calls, those around the $110 and $111 levels. Just as there's significant interest in the $100 puts, there is also notable activity on the call side, with traders betting on Nvidia's potential to rise above $110. If Nvidia breaks above the $106 resistance and holds that level, the stock could rally towards the $110 to $111 range. However, traders should keep an eye on the Bollinger Bands. If the stock touches the upper band, it might be due for a pullback, whereas a touch on the lower band might indicate an opportunity for a rebound. However, it's worth noting that the $110 to $111 range is still within the realm of possibility, only if Nvidia can maintain its momentum above key technical levels. For those looking to trade Nvidia this week, the safest range appears to be between $102 and $118. If Nvidia fails to hold above $102, it opens the door to a potential drop towards $90, making the $100 puts a more attractive bet. Conversely, if Nvidia breaks above $106 and sustains that momentum, the stock could potentially climb to the $118 level, making the $110 and $111 calls worth considering. But what about the $120 calls that some traders are eyeing? While there is some interest in these options, they are more of a long shot for this week. Even if Nvidia experiences a bullish breakout, it's unlikely that the stock will surpass $118 in the immediate future. Therefore, trading the $120 calls this week might not be the wisest choice, as the odds of them coming into the money are slim. Speculative trades like these can offer high rewards, but they come with equally high risks. The graph highlights Nvidia's critical juncture, showing substantial interest in the $100 puts, signaling potential downside if key support at $97 fails. On the upside, breaking above the $106 resistance could trigger a move towards $110 or higher. This week's trading will likely revolve around these pivotal levels, making it essential for traders to monitor how Nvidia navigates this range. So to summarize, Nvidia is at a crucial juncture. If the stock breaks below $102, the $100 puts could be a smart play. However, if Nvidia holds above $106 and breaks above the 20-day moving average, the stock could have room to run towards $110 and possibly $118. Watch how the stock interacts with the Bollinger Bands as well. These could provide clues on whether the stock is overbought or oversold. The $120 calls, on the other hand, are less likely to see action this week. Investors need to stay vigilant and keep an eye on these key levels to make informed decisions. Additionally, it's important to stay updated on any news or developments related to Nvidia, as these can have a significant impact on the stock's performance. As always, when trading options, it's essential to weigh the risks and rewards carefully. Consider implied volatility and the time remaining until expiration when entering trades. For short-term trades, it may be better to focus on at-the-money or slightly in-the-money options to minimize the impact of time decay. It's crucial to stay informed and monitor Nvidia's price action closely throughout the week. Consider setting alerts on your trading platform to keep track of these critical price points so you can act quickly when the market moves. Remember, the key to successful trading is staying informed and being prepared to adapt to changing market conditions. And before we wrap up, here's something to ponder. In a market as volatile as this, what's your strategy to stay ahead of the curve? Drop your thoughts in the comments. If you found this analysis helpful and want to stay updated on the latest investment insights, be sure to like this video, subscribe to Simple Investing Secrets, and turn on notifications so you never miss an update. Remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Thanks for watching, and we'll see you in the next video. Take care.